Sabah al khair. Good morning, everyone. My name is Nicholas Luciani from the Center for Economic and Social Rights. It's really a pleasure to be with you. Thank you to ANND and Christian Aid and the other organizers for allowing me to participate from afar. It would have been really excellent to come back to Amman, but it just wasn't possible this time. So I apologize, but thanks again for letting me participate. Uh, I thought it would be a good opportunity to share some of our lessons working with partners around the world in Spain, in Ireland, in Peru, in Brazil, and Egypt, Palestine, in the United States, to share a little bit about how women's rights is affected by this corrosive phenomenon of cross border tax abuses. So, first, the very basics you may have discussed or will certainly over the next couple of days. The way that tax is raised and spent, the tax system itself, and how it's designed and implemented, plays a really significant role in driving gender inequalities or potentially gender equalities within countries. Regressive tax structures with high levels of tax evasion and high levels of tax avoidance, they create gaps in government revenue, which unfortunately women have to fill. Why do they have to fill this? Because women in most countries are clustered in low income and precarious jobs with precarious wages and unequal wages. As a result, when consumption taxes or labor taxes are increased, it is they who pay the disproportionate burden. Not only in terms of the gaps in revenue, but also the gaps in services that accrue as a result of this decreased revenue. The services I'm referring to are things like health care, education, early childhood education in particular, disability and elder care, water and sanitation, even fuel infrastructure. When these services are underfunded by the state, it's women who step in and become the champions we all know they are to make life worth living in difficult circumstances. And so, in sum, when governments are unable to raise sufficient revenue through direct taxation or other forms of taxation, in particular corporate income taxation, it's women who fill the gaps, both the service and the revenue gaps. And so, in this way, cross border tax abuses disproportionately affect women and women's rights. Just as domestic tax systems can reproduce unequal burdens on women within countries, the broken international tax regime itself, unfortunately, is reinforcing these gender inequalities in many countries, if not all. Um, as you may know, states lose significant public resources when corporations and individuals avoid paying their fair share by shifting their profits or their income into countries where they pay little to no tax, or that profit and income is held secret for decades at times. Now, on the corporate tax side, the IMF has said that around $600 billion a year is lost in corporate tax avoidance annually globally. That's a tremendous amount of money, which could be really be a game changer for human rights around the world. But of course, it's low and middle income countries that lose out and are hit hardest by this. Why? Because they have the fewest resources overall. They have weakened tax administrations, and they depend to a greater degree on corporate taxation as the overall tax take. Um, uh, the result is a sort of a reverse Robin Hood effect in which money is transferred out of poorer countries, which are in need of public services and are in need of revenue, into financial secrecy jurisdictions, wealthy countries who are not as much in need. This system benefits a select few of wealthy shareholders, tax attorneys, wealth managers, and CEOs at the very top, who, by the way, happen to be predominantly rich white men in rich countries, and those who bear the brunt of the regressive taxation and underfunded public services which result from cross-border tax abuse are largely poor women of color in low and middle income countries. Now, this phenomenon of cross-border tax abuse doesn't happen in a vacuum. This isn't a natural phenomenon, but is something relatively new, certainly in terms of the size of it, and it's enabled and encouraged by certain laws and policies of certain countries. Now, we're never going to come to grips with the devastating effects of cross-border tax abuse unless we call out, identify, delineate, and challenge those countries which are most responsible for this phenomenon. Much international attention has been paid recently to the Panamas, the Cayman Islands of the world, the BVIs of the world, all of which deserve their amount of the blame. Yet a deeper look shows that the untaxed income and profits are really only booked there. They're not banked there. They're banked in wealthy countries, in particular in London, Geneva, and New York. So we need to come to grips with these three countries in particular and how they are fundamental to driving cross-border tax abuse around the world. So very quickly, take Switzerland, who's been a subject of ours, a little bit of an obsession of ours over the past couple of years. We've gone before the Committee on the Elimination of All Forms of Discrimination to show and prove how Switzerland's policies, in particular the banking secrecy laws and the weak reporting standards and unfair tax incentives for corporations, has encouraged cross-border tax abuse of individuals and companies around the world. We've shown how Switzerland has improved some of these policies over the years, but as of yet, those improvements have not really benefited low and middle income countries quite at all. Quite the contrary, they've benefited the US and European countries to the detriment of other countries. Just as a side, the CEDAW committee agreed with us, and for the first time in its history, put out very clear concluding observations and recommendations on Switzerland to change its policies as they affect women's rights around the world, and to do an impact assessment of their tax policies as they affect women's rights overseas. There are a few victories these days, but this, I think, is one of them. Moving on to the United Kingdom, the UK, as you may know, is also a huge player in cross-border tax avoidance around the world and cross-border tax abuse. In contravention, as the ESCR committee has said, thanks to some more information we provided them, in contravention to their obligations under the Convention on the Elimination, under the Convention on Economic, Social, and Cultural Rights. For the U.S., the U.S. is threatening to leapfrog its competition at the moment to become the world's largest tax haven. This is going to have outsized effects on women's rights inside and outside of the country if it goes forward. I don't have time to get into the details, but this new corporate tax regime that's floating around on Capitol Hill and in the White House is designed specifically to poach the tax base and economic vibrancy of other countries around the world. It would transform the U.S. into the world's favorite haven for multinationals in particular, and would put pressure on countries around the world, not only in Europe but in the South, to reduce their corporate rates even further, supercharging the race to the bottom and forcing governments into this Faustian bargain of increasing regressive consumption taxes, going into further deficit, or cutting back in budgets which women disproportionately benefit from. I should say also that this corporate tax regime threatens to appreciate the dollar, some 15 to 25% around the world. Low and middle income countries, which hold a lot of their debt in in dollars, would be forced to pay that much more, 15 to 25% more in debt servicing. You may know this is a serious threat to countries around the world, and as we know, specifically women in those countries who really hold up the social infrastructure when countries decide to fiscally consolidate and enter into austerity measures. It's women who pay the social and fiscal costs of servicing sovereign debt spikes, and let's make sure that the U.S. tax reforms don't reinforce that unequal outcome. And how do we do that? What can be done? Well, I've been asked to talk a little bit about the extraterritorial obligations of states under international public law, international human rights law in particular. So I don't have the time to go into too much detail, but I want to point out first that you can look at a very singular document called the Maastricht Principles on State Obligations in relation to extraterritorial obligations in the area of economic, social, and cultural rights, which was a product many of us worked on over many years to really consolidate, crystallize existing international law as it relates to international cooperation and the relationship between sovereign states. And it goes into detail in a number of different areas, but I want to point out 4 obligations of states as they exist today, which I think really could be game changers in making this international tax regime more just and more equal for women, make it substantively equal for women. First, there is a duty of all states under the UN Charter, let alone human rights treaties, to respect other countries, to not do harm in other countries. To the extent that a Switzerland or the United States is undermining the ability of a Zambia or an Jordan or an Egypt to raise sufficient revenue to spend on women and human rights, that those countries are running against their duty to respect the fiscal space and the fiscal sovereignty of their neighbors, and so need to be held to account according to that obligation. Amongst other things, that implies that every major country in the world, every systemically important country in the world, should do impact assessments, periodic independent impact assessments of how their corporate tax policies and other forms of tax policies affect women's rights and human rights across the world. The second obligation, which is really important, is the duty to protect against abuse by third parties. Corporate tax abuse, as you know, is extensively done by private sector agents, be they individual companies, individual wealthy households. They're driving this problem. States are contributing, certainly. States are allowing this to happen, but it's individuals that need to be held to account for these tax abuses, as is an obligation under international law, the duty to protect. And so we need to think better about how to engage the question of individual and corporate tax abuse in this discussion around a binding treaty on multinationals being discussed in Geneva, but also everywhere the guiding principles on business and human rights is being implemented. We need to see how that can apply directly to the question and challenge corporate tax abuse and individual tax abuse. Third, the right to information, as you know, is enshrined in many national laws, but also has very important implications cross-border or extraterritorially. We believe that human rights depend on resources. I think that's quite obvious by now. And those resources depend on large taxpayers paying into the public coffers. And states can't hold those large taxpayers to account unless they have correct information. My time is up. I'll just conclude on these. And so the right to information extraterritorial means that low and middle income countries around the world should have direct and automatic information about taxpayers that have reaped benefits in their own countries, so that they can really hold them to account for their tax liabilities in those countries. And I should say not just the countries themselves, but the public in general, journalists, civil society, who've been at the forefront of driving the tax justice movement. They need to have access to this information as well to ensure that enforcement actually happens. And fourthly, an obligation of international law has to do with the right to participation under the Covenant on Civil and Political Rights. We think it's anathema to this right to participation that OECD country citizens, American citizens, German citizens, UK citizens, should have more of a right to participate and determine the future of the international tax system than citizens in non-OECD countries, say citizens in Zambia, or even refugees living in Jordan. Every person that is affected by the international tax regime, which are many, but in particular those that are adversely affected, disproportionately affected, should have the right to determine the future of the international tax regime, either through their government or, when necessary, directly. For that reason, we believe in the future of an inclusive UN global tax body, which will have not only the legitimacy but the right to together develop and rewrite new rules for the future of the international tax regime, which are based on international tax not based on norms of international tax competition, but based on norms of international tax coordination and competition, and based ultimately on the realization of human rights for all, in particular those who are most marginalized and at least advantaged in the international system. I thank you for your time, and I wish you the best of luck over the next couple of days. I look forward to hearing more of you, and because I can't participate in the Q&A, do feel free to send me questions by email or concerns or follow up with me otherwise. Thanks again, and take care.